You know what? I'm going to go away from what I had planned to say. I need to go off the cuff right now. I think people in crypto right now are like people lost at sea. They're starving, thirsty, absolutely desperate. When a lost person is rescued and gets a cracker, that's like the best piece of food that they've ever eaten. Better than a, 3-star Michelin meal or whatever, or a burger. I like burgers. Anyway, that's what people in crypto are like. They are so desperate for a pump that a 20% move on an alt that's down 80% feels like alt season. It's not. Alt season hasn't started. It can't start until ETH moves up decisively. ETH is the queen of alts. Until the queen wakes up, the pawns are asleep. And here's the chart that proves it. A chart that separates the pros from the plebs. Bitcoin dominance. It measures what percentage of the total crypto market cap belongs to Bitcoin. And right now, it's still hovering around 65%. That is way too high for a real sustainable alt season. Think about it. When Bitcoin dominance is high, it means capital is scared. It's clinging to the king for safety. For alt season to ignite, we need to see that capital get brave. We need to see it flow downhill from the safety of Bitcoin into the riskier frontier of altcoins. And that means Bitcoin dominance needs to do one thing. It needs to break down hard. I'm not talking about a little dip. I need to see a clean, decisive crash below 60% with momentum. That is the signal that I'm looking for. That's my evidence that a major capital rotation is underway. If Bitcoin dominance is flat or, God forbid, rising, then altcoin pumps are just noise. It's a 20% pump that can turn into a 30% dump the moment Bitcoin retraces a bit. And this was true in 2021 and in 2017. Until we get a break below 60%, alt season hasn't even begun loading. But that doesn't mean I'm not preparing. Because while most people are on Twitter watching influencers shill or 100x low caps, here's what's happening in the real world. The giants are waking up, and they're not buying meme coins. They're stacking the leaders. BlackRock just shoveled another $300 million into their Ethereum ETF. They now hold 2 million ETH. HSBC is integrating Ethereum infrastructure. BitMining just announced a plan to raise up to $300 million to build a Solana treasury. Do you see the pattern here? While retail is chasing 20% pumps on micro-cap shitcoins, pumps that will vanish the second Bitcoin retraces, the smartest, richest, most powerful players in the world are quietly, strategically accumulating ETH and SOL. They aren't reacting to green candles. They are positioning for the macro move. They see what's coming. They are building their core positions for the real rotation. So ask yourself, are you going to pay attention to Twitter degens or are you going to watch the smart money? I know what I'm doing because this cycle is different. It's more dangerous. Every little bounce feels like a breakout. Every 20% pump on a microcap feels like the beginning of 100x. It's not. Actually, this is often the trap phase, as my friend Benjamin Cohen points out in this tweet. A small summer pump in July is normal before a continued downturn the rest of summer. Now, I don't necessarily agree it is, but it is worth considering. Now, before you start typing your angry comments, because I know some of you attempted to do that, just think about what you're doing. If just a mere mention of the potential of a pullback gets you angry, that means you are too emotionally invested.